Investors and traders, welcome to the channel Market Chat Pattern. Today is 10th of January 2024, and I hope everyone is having a great day. In this video, we are going to take a look at the key US stock indices that we follow. We'll do our daily recap, and as always, this video is for educational purposes only and is not a financial advice. So we'll start with a quick summary of the key financial markets that we like to follow. So starting with the bonds, so we are looking at the US Treasury bonds, and here what we see is the 10-year Treasury note, fairly muted action today, not much change, but still lost on the day by 0.08 percentage points. The 30-year long bond futures, it was weaker, and what we see is it lost about 10 ticks or minus 0.26 percentage point. We'll come back to the chart of the bond futures, and we'll just look at how they are trading. They're just basically range bound and but still supported from a key level. The dollar was weaker today, lost about minus 2 percentage points. And look at the other currencies, they were stronger, whereas the Japanese yen was the weakest of all these currencies that we follow. Here, look at this, how much the US dollar actually appreciated against the Japanese yen. So Japanese yen is definitely much weaker. Gold, or the metals. So gold lost about $6, and it's a minus 0.3 percentage points. Silver was also weaker for the day and lost minus 0.35 percentage points. This is despite the dollar actually closing a little bit negative for the day. So the weakness in the dollar did not help the metals. Okay, then we look at the energy. Energy one is really interesting. Looking at the crude oil. Crude oil, I thought towards the end of last week that we'll probably see a more bullish price action in crude oil, WTI crude oil futures contracts, but the performance has been sideways, range bound to down, and actually it lost minus 1.26 percentage points today. Natural gas had been a stellar performer this week, and it had been gaining 7% yesterday, and the day before it was about 6%, and today it just did give some of those gains back and closed minus 4.11 percentage points lower. And now coming back to the US stock indices, all of them closing in the positive territory. All of them look green, with the Russell 2000 being the weakest, and we see actually NASDAQ 100 E-mini futures being the strongest with the 0.76 percentage point gain, and the ES E-mini futures 0.62 percentage points, and the cash S&P 500 index closing in the positive territory as well. We'll take a look at the bonds, and then we'll begin to take a look at the individual stock indices. But before I do that, just a quick summary or a glance over the standard deviation levels that we were following for today, which I had published yesterday. So these were published yesterday in our video for today, and what we can see is the E-mini S&P 500 futures contract. The +1 standard deviation calculation was for 48.22, and the price in fact did reach that and closed 48.20. So that's very good. On the weekly standard deviation figures, which I will just also remind everyone, which we actually published at the beginning of the week before starting the actual trading for the week. The S&P 500 E-mini futures have actually also reached the +1 standard deviation level for the weekly levels as well. And here we go. So this was the +1 standard deviation for the NQ, and the NQ actually also closed above this, so it actually reached that. And this is the Dow Jones. So the Dow Jones has been interesting because I believe because of the issues going on with the Boeing Airlines, which is a component within the Dow Jones Industrial Composition and does have a fair amount of weightage in it. The performance was actually lacking compared to the NQs, but this index is actually stronger compared to the other ones because it never really closed below that swing point, and we'll just talk about that as well. And looking at the Russell 2000, the 1994 is that level, and this one is the weakest of all of them. Let's just quickly take a look at the weekly levels as well, as a reminder as well. So here we go, 48.22. This was the +1 standard deviation for the ES, and we have actually managed to reach that today, and close slightly below that. Now the Nasdaq is actually between the +1 standard deviation and the +2 standard deviation, which is the normal behavior that we are expecting. And the just to take a look at the next weekly standard deviation level, 17,069. Dow Jones 38,416. This index is still below its +1 standard deviation level, 1986. So the S&P, the Russell 2000 is getting closer to the weekly standard deviation levels. And towards the end of the video, if you're able to stick around, I will also give the daily standard deviation levels for tomorrow, which is 11th of January 2024. With that, we'll just begin to dive into the individual charts, and we'll discuss those in more detail. Okay, so before coming back to the equity indices, let's take a look at the here we go, the ZB, which is the Treasury bond 30-year futures contract. And here what we find is that this is what we were discussing, the 61.8% Fibonacci retracement from this low, also 23.6% retracement of this entire low to high. And then if we just move back to a 1 hour chart, and here we had this one-to-one price projection ABCD. I have not labeled this, but this brown line you can see, this was a really a key pattern coming right at the 61.8% Fibonacci retracement of this swing low to high, which has proved to be a good support level thus far. And look at just the price action, it's just going nowhere. With the CPI data coming out tomorrow, a really key data, it will be very interesting how the bonds are going to trade, because the bonds are very much interest rate sensitive instruments. These are interest rate instruments, and if the price of the bonds go up, it means the yields go down, and vice versa. So again, maybe it's just coiling in this price action because of the key data point. And I did make a mistake. I thought that data was coming out today, but it's in fact coming out tomorrow. With that, let's actually move to SPX, and I'll just move back to the daily chart, and we'll just take a look at the SPX. So this is the daily chart of S&P 500 cash. This is something which we like to take a look at for longer term analysis. For shorter term, the futures, the ES E-mini contract works really nicely. Okay, so here a look at this. This has been a nice day up, and it's just going to very close to the high that we have reached on the 28th of December 2023 last year. We do have this bigger ABCD price pattern completing around 49.10, so there is a possibility to do that. The key thing about S&P 500 the cash index is that it did not take out the highs from January 2022, so whereas in the futures we did that. So here yesterday we had an inside bar, and this is where on the futures contract, because of key Fibonacci retracement, we were thinking as a possibility, as a scenario, that in fact today could see a pullback in the prices, but we did not. So we'll just discuss that more on this chart of S&P 500 E-mini futures contract. So here we go. Here what we see is where you see these orange lines. Let me actually try to blow this chart up a little bit. Here we go. And more here. These are market profile levels, weekly levels, and yesterday the market had just closed at the bottom of this profile level, and it wasn't really an inside bar, but it just took out this high of the previous day up just by a little bit, but again it closed as a bear bar, so which in my opinion it then becomes on a daily chart level a bear trend. But because of that, there was a possibility that we could perhaps see today actually closing lower the below the low of yesterday, and that could mean that this this purple ABCD one-to-one price action pattern might in fact uh, come into play, but that did not take place today. We also convincingly took out the 61.8% Fibonacci retracement. I believe we might just be at the 78.6% now. No, in fact, we are above that as well. And where did we go? We really went to the central point of the profile, the weekly profile. The PC is the actual the center of this profile. So we just went there and we just closed around it. Looks like depending upon the data, probably these highs on the top of this profile might be the next target for the S&P 500 E-mini futures. Now, one thing about the data, who knows what the data will look like, but what we can actually talk about is just about the price action. So, for example, if the good news is really going to be good news, or the good news is going to be bad news, and bad news is good news. So what do I mean by that? So for example, if the CPI figures they come softer than expected, which means the inflation is cooling, and we still see the market actually closing lower or maybe sharply lower, then it's good news but bad action in the market. So what it means is there is a direct market feedback coming. This is the direct market feedback, that perhaps something else is also on the cards, and it's just not all about inflation, for example. And although the data was good, lower inflation, the market still went lower. And on the flip side, if it is, for example, bad data in the sense that the inflation figures they come out a little bit higher than expected, but the market still moves higher, then it's bad news but a good action. So that's also a direct market feedback. So we'll evaluate that when we have the figures available to us. At the moment, we are just having a discussion. So let's take a look at the NQs. So the Qs, here we go. They were also very strong today, and we had this 61.8% retracement coming in yesterday, and just like the ES, there was a chance of this. We were talking about this one-to-one price projection. But today actually took out yesterday's high, so that's good, and just closed right at the 61.8, the 78.6% Fibonacci retracement. And now we do have a higher expansion level of this entire swing from this high to this low, which comes at around 17,250. So we'll have to watch and see how the market is actually going to trade. Let's also take a look at the Dow Jones futures. So the Dow Jones futures chart, or the Dow Jones Industrial, it's very interesting. The reason I say it's very interesting is because we do have this completed ABCD pattern. Of course, the level is a little bit higher, but look what the market since the new year, and even during the Christmas week, there was just no center rally, and the price action has been muted. It's just been range bound. But one of the key things is that this low hasn't been taken out, but in the other indices it did happen. For example, S&P 500 and the Nasdaq 100 futures. So this swing low was not taken out. So it hasn't really given any signal. It's just in a range around this 1.618 expansion, and of course we have the ABCD one-to-one price projection also completing nearby. So kind of mixed signal from the Dow Jones Industrial Average. Now, Finally, let's take a look at the Russell 2000. This is the small caps. Of course, this one has been the weakest one, and especially today, it was the weakest of all the indices. And here, what we see is yesterday, right at the 38.2% Fibonacci retracement, and also this is the micro double top. Because let me actually have a quick look. The high was 2002.7 and 2004.6. So it did take yesterday 2002.7 and 4. Yeah, so it never actually took yesterday's high. So on the 9th of January 2024, it never took out the highs of 8th of January 2024. So Tuesday did not go above Monday's high, so that's an inside bar. And it also completed right at the 38.2% Fibonacci retracement, and so did was the 8th of January 2024 bar, which means that there's just, unlike what happened in the ES, this had a potential of actually being more weak, and this is what we have seen today. This one is actually quite weak. Now in strong trending markets, the 38.2% Fibonacci retracement acts very a lot of resistance actually comes from this point. This is what we are watching really carefully. If the Russell 2000, the small cap index, really wants to move higher and join its other friends, the S&P 500 E-mini futures contract, the Nasdaq 100 futures contract, for a rally to the upside, it really needs to break out of this 38.2% Fibonacci retracement with a lot of conviction, but it's failing to do that. And just taking a look at this on a longer term, this is the weekly chart, and if we just blow this up, what we see is here, look, it's just been in a really long range for a long time, and bottom of the range rallies, top of the range, so it sells off, and this is what it has done about 3 times. And this time it was trying to break out of it and finally managed to do that. Now it's back into the range, and this entire range is about 50%, and the top of this range is at 50% as well, from this swing high to this swing low, and it's 50% from this swing low to this swing high. So it's just right in the middle, and the price is just going at nowhere. It is just coiling inside a range. So this is what we are looking at in the indices. Let me actually give you the daily standard deviation levels for tomorrow, and I will also put these in the description. The formatting in the description is not great, so apologies for that, but this is what we are looking at in terms of the standard deviation levels. So the expected move in the S&P 500 E-mini futures contract, about 32 points up or down. NQ's 112 points, 112 and a half points. Dow Jones 250 points roughly, and Russell about 13 points. We'll have to wait and see how the market will trade tomorrow, and then we'll have our recap and we'll evaluate things. So thank you very much for watching the video. Apologies, the video got a little bit longer, and I hope you guys have a great great day, and speak to you guys soon. Thank you, good luck and good trading.